Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonal Bhutra, and this is a pretty remarkable pullback and a recovery for our markets. We had a gap down opening. The Nifty went down to levels of 17,600, but now it's climbed and clawed its way back to that 17,700, which is where the 20-day moving average on the Nifty currently is. So on the benchmark indices, the Nifty, Sensex, and even the mid-cap index, we're pretty much flashing red and green, just mildly low on the benchmark on the Nifty and the Sensex, while the mid-cap index just 2 minutes ago was flashing a green tick, just down 14 odd points right now as we speak. So continuing with the momentum that the Indian markets had. Remember on Friday and Monday, between those two trading sessions, the Nifty had rallied close to about 400 points. This morning, there was a gap down. There was a risk off across the global markets, and it's still there. Look at Hang Seng, that's down 1.5%. The Korean markets are down 1.3%. So Indian markets have shrugged off the weakness that we're seeing across the Asian markets and attempted a bit of a pullback. The question is whether we can build on that. We are currently around the 20-day moving average. To quickly run you through some of the big movers and what's aided the recovery right now, it's the FMCG names. So Tata Consumer, Britannia, pull up the intraday chart of something like an ITC or a Tata Consumer, and you would see strength coming through. In fact, these stocks are pretty much at the day's high. On the losing side, it's IT names, which are on the back foot today. The Nifty IT index is down about 0.7%, with heavyweights like Infosys down 1.25%, HCL Tech too, down close to about 0.6%. A couple of the other drags include Bajaj Finance, that's the top Nifty loser, Hindalco too, sulking with a cut of 2%. Hi.
Hey Reema, good morning. Yes, so the big question, as you said, is whether we'll be able to sustain or build on to the rally that we saw from the lows as well. Definitely, we've shrugged off the global weakness. So that is something that we'll be tracking for sure. Whether Friday's action is something that we'll see today as well or not. So a lot of stocks in focus. We'll keep talking about them in greater detail for you as well. But it's time to welcome the first corporate on Trading Hour. VST Tillers delivered strong sales for the month of February. The company reported sales of over 4,000 units for the third consecutive month. The tractor business, though, has seen some pressure on a year-to-date basis. To discuss the sales print, the trends and the outlook going forward as well, we are now joined by Anthony Cherukara, who's the CEO at the company. Anthony, good morning. Thank you so much for joining us. Well, yes, it's the third consecutive quarter where you've seen sales of more than 4,000 units, but they've been declining on a month-on-month basis. Can you tell us what is the sustainable trend, why this decline, and how is demand right now on ground?
Good morning and happy Women's Day to both of you. And talking about the decline, agriculture is a seasonal business. So there are seasons when before the sowing season, the industry goes up, the sales is up, and then you have sessions where the crop is already planted, and then you will have the business coming down. But this is purely seasonal. But looking at the trend, the reservoirs are full, the minimum support prices are high, the cash flow is happening in rural India, and this all augurs well for agriculture in the near term.
Okay. But sir, year to date, your tractor sales are down almost 18%. Year to date takes into account the last monsoon season as well. So could you explain that weakness? And because your peers are not reporting such weak numbers, the other players in the tractor market, and when should we expect a recovery?
Yes, VST Tillers tractors is present in the compact tractor industry, which is only 90,000 of the 900,000 tractor industry that is there today. So we have not seen growth in the compact tractor space. And hence there is a drop, and also there was a delay in a couple of product launches that we had planned, but we expect to end flat this year because the international business has grown while the domestic business has shown a little decline. So we are expected to end flat this year on the tractor business.
Okay, you're expecting a flat growth in the tractors business. That means you're expecting substantial recovery to come back in this month itself. On the power trailer side, sales are strong. That is one segment that has done well for you, 14% up on a year-to-date basis. Is that continuing? What is the outlook going forward as well? And if you talk about demand in the rural segment especially, are you seeing any weakness?
The demand is likely to continue. As I said, in the near term, all the demand drivers look good. The reservoirs are full, the minimum support prices are high, and the cash flow in rural market is good. So all these augurs well in the near term. But there is, of course, the talk about El Nino and how it plays out during the coming monsoon. And so fingers crossed for Q3 and Q4 of next financial year.
So you had earlier guided for a 20% growth in the tiller segment. Is that something you'll be able to do, or will it be better than that?
Yeah, I have given a guidance of 15 to 20%, and that we will be achieving for the tiller segment.
Just getting back to the point about tractors, I understand that compact tractors has not done well, which is where you operate. The industry growth has not been there. But over the medium term, would you look to expand your scope, perhaps get into specialty tractors, utility tractors, any other forms?
Absolutely. So we are on the verge of launching utility tractors with our joint collaboration with Zetor, which should be launched in the first quarter of the coming financial year. With this, we will be entering into the larger horsepower space, wherein we will be participating in the larger segment of the tractor business.
Okay, and this launch is going to take place in Q1 of FY24, the April to June quarter.
Correct.
And what is your manufacturing ability?
You're right.
Okay, and what is the manufacturing capacity of these utility tractors? How many will you be able to produce?
Currently, we have a capacity of 30,000 tractors that can be manufactured, which includes roughly about 15,000 compact tractors and 15,000 of the larger utility tractors. So we have sufficient capacity for the next couple of years. We should be able to look at new capacity after 2 years or so.
Okay, after 2 years. And what is the capex you have planned for any capacity expansions that you'll be undertaking? It will not be in the near future, you mean?
In the near future, nothing on capacity expansion, but our capex on product development and setting up an R&D global tech center is on the annual, which we are looking at close to 100 crore capex in the next coming financial year.
You know, what we are understanding is that from your current capacity of tractors, half of it will be used to manufacture compact tractors and the other half will be used to manufacture utility, right?
You're right.
Okay, so this will not be incremental sales or, you know, very much by incremental revenue for you.
Yes, incremental revenue on, on the larger growth would come from the utility tractors, which we would be getting into in Q1. So you will see in the next couple of years or in the near medium term, the larger revenue impact is going to come from the higher horsepower tractors we are launching in the market.
Okay. So what would that mean in terms of revenues and margins? Will that particular product profile also bring in higher margins for you? 9 months, your revenue is up 7.5%. Tell us, what will you end this year with? What is the outlook for FY24 and margins as well, because they were under pressure in 9 months?
Yes, there has been a commodity inflation driven pressure in the first 3 quarters of the year. In Q4, we are looking at cooling off on the commodity prices. So this should impact us positively in the last quarter. So we expect to be in the guidance range of 12 to 14% that I've spoken about earlier. And going forward, with the launch of new products, there would be a margin pressure. So the guidance is revised to 11% to 13%. However, what we are looking at is increasing the top line and the total earnings for the company. So it is a growth-driven model that we are looking at, and that is the ultimate goal for VST.
So FY24 revenue guidance will be, margin guidance is 11 to 13%. What about on the top line?
Yeah, so we have maintained a CAGR of about 20 to 22%. We expect this year also to be closer to that 20% mark.
Any other product launches? One, of course, is the utility tractor in Q1. Any others that we should expect in the next 12 months?
Yeah, yes, we had announced supply to some of our technical partners in the electric platform space. We should be ramping up the supply to them in the coming quarters.
Okay. You had earlier told us as well that you're looking at expanding in the Latin American market, the African market. What is exports as a percentage for you, and what kind of expansion are you seeing there? We are talking about this headwind that is coming in from the export markets. Are you facing that as well?
Yes, in the first 2-3 quarters, we had an headwind with the Ukraine war and predominantly our exports being to Europe. So we saw a pullback in terms of orders, but now what we are seeing in the last 3 months is the orders are back. Surprisingly, there is a growth that is expected in the international business in Europe. The focus is on Latin America, Africa, with the launch of utility tractors and four-wheel drive tractors, which we are expecting to launch in the next financial year. We will be playing a larger role in these two continents as well.
We'll leave it at that. Thank you very much, Mr. Cherukara, for joining in. That's the word of coming in from VST Tillers and Tractors. The focus appears to be more on top line rather than on margins. On margins, they are making investments in new product launches, which will boost the company's top line. Get into a break. On that note, on the other side, we'll discuss commodities. As always, Manisha Gupta will be joining in next.
Welcome back. Well, the big news overnight has been Fed Chair Jerome Powell's comments on inflation and rate hike trajectory going forward. So let's get your highlights from that particular meet and his hawkish commentary overnight that weighed down the markets. He signaled that rate hikes will remain higher for longer. CNBC's Steve Leisman gets us a roundup of that testimony.
Fed Chair Jay Powell shocked markets by taking on a more hawkish tone than expected and opening the door to a 50 basis point rate hike at the March or May meeting. Powell said the Fed could go to a faster pace of rate increases if the economic data continued to show stubbornly high inflation and strong economic activity. He added that the ultimate level of rates is likely to be higher than anticipated at the Fed's December meeting. And he repeated that the Fed would maintain a restrictive policy rate for some time.
I think the data we've seen so far, and we still have other data to see, we still have significant data to see before the meeting, suggests that the ultimate rate that we write down may well be higher than what we wrote down in December.
The result was to dramatically increase the market pricing for a 50 basis point hike at the March meeting. It rose from 23% before the speech to around 60% by the close of trading. The peak funds rate also hit a new high of 563, now priced into the October contract, and the January 24 Fed funds contract also reached a new high of 551. Most importantly, the Fed chair left little room for misinterpretation. He used the word disinflation only once, and in the context of not seeing it in core service inflation. He had used it 15 times at the December press conference, mostly in a dovish way. So Powell left little doubt if the inflation data stays high, the Fed is going higher still, more quickly and for longer. Steve Leisman, CNBC Business News.
Okay, that is the big headline, right? Jerome Powell using the word disinflation only once in his latest congressional testimony versus 15 times in the December speech that he had when he did the December FOMC press conference, and the market fears that we are going to see more rate hikes, higher than anticipated peak rates, and perhaps in the month of March, which is when the next FOMC meet is, we could have a 50 basis points rate hike, an acceleration compared to the 25 basis points rate hike that we had in January. But let's talk about the impact this has had on commodities. Manisha is now joining in. Manisha, we've seen a big run-up in dollar prices.
Well, yes, almost inching towards that 106 mark. And while the knee-jerk reaction in many of the metal prices already is done, and we have seen some opportunity buying on the lower side for some of these metals, but at the best case, we still are off the highs for many of these metal prices. And on a week-on-week basis, we are trading in the negative for many of these industrial commodities here. So while, of course, the dollar index is changing on a higher side, markets are now pricing a 70% probability of a 50 basis point rate hike in the Fed meeting in the month of March. You know, a couple of days ago, there was a 30% probability of that. So that clearly seems to have changed overnight here. You were just listening to Jerome Powell's statements, and exactly that the central bank is prepared to hike interest rates more aggressively going forward is something that hasn't augured well for many of these metal prices there. Add to that the fact that the China 2023 economic growth at 5% is the lowest in 30 years that China has put out, and that has been a bit of a dampener as well. The China import data for the month of February down by 10% hasn't done much of enthusiasm enthusiasm as well. And then no major stimulus announcement has come in from the annual meeting of the China Congress planning, and that also has led to metal prices coming off their highs. Markets are looking at the Chinese yuan trading at a 7-week lows right now. With the dollar index strength, we have seen many of these metal prices under pressure. That's exactly what we have done on a week-on-week basis for many of these metal prices. We are down anywhere between 1.5% to 5% on the weaker side. Markets will watch out for the US non-farm payroll data, and that comes in on Friday.
Okay, all right, Manisha, thank you so much for joining us. So with the impact that this particular testimony has seen on the commodity markets, for now we'll slip into a short break. When we return, we'll discuss market technicals with Mitesh Thakkar and also discuss his top trading bets. Stay tuned for that.
Hey guys, welcome back. You're still tuned into Trading Hour here on CNBC-TV18, and after that gap down style that we got, the market has moved up quite well. So right now we're seeing around a 30-point cut, but there's been a significant recovery that has come through in the Nifty. The mid-cap index is also in the green. It's absolutely flat right now as well. So looking like quite a resilient screen for now, considering the kind of handover that we did get. Let's get you a technical check and tell you how you can maybe approach the market today. Mitesh Thakkar is here with us for exactly that. Mitesh, like I was pointing out, there's definitely quite a bounce that we've seen from the day's low. Would you look at this on just an index level and take that call?
Morning, Pavitra. In fact, the view earlier was that the gap down should be immediately bought into. One, with the rally which happened on the Nifty on Friday, and then, some kind of fall on Monday, the hourly and the 2-hourly charts were very positive. And therefore, I think the gap down was very likely to be bought into. And we had looked at a support level of around 17,600, suggesting to buy around 17,625 with a stop below 17,575. So we got a low of around 17,602. I think today's low in that sense becomes a good marker, reaffirm 17,600 as the pivot. And on the upside, I think a retest of 17,800 is a minimum in the next 1-2 sessions. But I think if we cross that, then we are looking at 18,000 or possibly even 18,150. So trading with positive bias in the short term, unless until we see the Nifty start stabilizing or trading below levels of 17,600 on an hourly closing basis.
Okay, and what would your individual or technical picks be, Mitesh?
Yeah. Good morning, Sonal. I have a buy on NCC. It's broken out of a good consolidation after a few weeks of sideways activity. Keep a stop below 94.5 here, and a target of around 105 on the upside can be looked at. And the other one is Exide. That's a buy as well. Here, I would recommend a stop at 180 and a target of 193.
Oh, Mitesh, thank you very much for joining in. The big headline is coming in once again from the Adani Group as they prepaid 7,374 crore of share-backed financing well ahead of its maturity. With this, the pledge in 4 Adani Group companies comes down. Vivek is joining in with the details. Vivek.
Well, absolutely right. This was one of the biggest fears as far as, the particular group was concerned, is that what was the proportion of the pledge shareholding as far as share-backed financing is concerned, and, what was the proportion that was remaining, and especially given the fall as far as the share price was concerned, what was the additional pledges that were being taken. So with yesterday's, news flow, what's actually happened is that there's now quite a bit of clarity as to how exactly, the prepayment has been done, and also, one very important coming in from the management as well. So, first looking at the news, the group has gone and repaid almost 7,374 crore of share-backed financing ahead of the maturity in April 2025 to both, international banks as well as Indian financial institutions. With that, the proportion of the promoter shareholding that was pledged with the lenders has come down quite significantly. In Adani Ports, 11.8% of promoter holding will be released. In Adani Enterprises, almost 4%. Adani Transmission, 4.5%. And Adani Green, 1.2% of promoters holding shall be released. Now, so far in February as well as March of 2023, the group has prepaid almost $2,016 million worth of share-back pledges. Now, more importantly, what the group is saying is that by the end of March 2023, there is a commitment to prepay all of the share-back financing, and this will be one of the most important triggers to watch out for going forward as far as the Adani Group is concerned.
Okay, all right, Vivek, thank you so much for joining us with all those details. So Adani Group continues to be in focus. So let's take that story ahead. Some allegations in the Adani case make no sense. That is the word coming in from GQG Partners Chairman Rajiv Jain. Now remember, the firm has invested over 15,000 crore rupees in the Adani Group recently. Also, pledge has been released on 4 Adani companies and the promoter has cut debt of over 7,300 crore rupees, the group said yesterday. Listen into excerpts from Rajiv Jain's chat with CNBC.
A lot of the court cases that were cited in the report have all been settled. I mean, one thing which I'm actually blown away is that everybody is paying so much credence to something which actually has been settled. I mean, some of the allegations actually really make no sense. And they can be verified in a number of different ways. So, like for example, the offshore issue. I mean, offshore, Mauritius is the second largest country where the foreign direct investment goes into India. I mean, almost every asset management company and private, on private equity or venture capital goes through Mauritius. That's a known fact. There are 35 million. There are 35 million open court cases. I mean, any company you look at, there probably have hundreds, if not thousands, of open court cases. So the allegations are I mean, that is frankly part of what happens in the Indian corporate landscape. It's very easy to sue anybody. I mean, as I was telling in one of the meetings, that it's easier to sue somebody than buy a bottle of beer in some of the states. If you go back to Adani Enterprise, they got Mumbai Airport in summer of 2020, and the stock immediately started ripping from that. I mean, Mumbai Airport is quite a unique asset. I mean, people forget that this is the middle of the city. They're going to double the capacity overall within the next X many years. And same thing for some of the other ones. So there was deregulation on the power side. In other words, allow them to push through power. The coal price increases. So there are a lot of fundamental changes. Was the stock a bit on the higher side? Probably yes, but there are good reasons why these stocks started running up.
All right, that is the word coming in from Rajiv Jain of GQG Partners. But with that, we are going to get into a short break. On the other side, we're going to bring you our brokerage corner, and we'll put the spotlight on some buzzing sectors and stocks that are in focus post some interesting brokerage notes. Stay tuned.
Welcome back. Down 35 points on the Nifty. The Sensex lower by 137 points. It's a cut of about 0.2%, but again, not bad compared to the weakness that we are seeing across the rest of the Asian market. Though from the top levels of about 17,700, we have seen a bit of a fade off of the rally. But let's get you some brokerage calls now. The first one is Bajaj Finance. The stock is down 2%. In fact, is one of the top Nifty losers today. There is a note coming in from Ambit where they say that the stock price and the valuations is currently pricing in very high growth over the next 10 years, which according to the company is very difficult to achieve. Abhishek is here with the rationale on this sell call. Abhishek.
Well, Ambit has initiated coverage on Bajaj Finance with a sell rating and a target price of 5,028 per share. They say that on a one-year forward valuation implies that 25% growth will be seen in AUM with an around 20% ROE for over the next 1 decade. So they say that despite superior technology, analytics, processes and distribution, this is a tall task. So no Indian lender has grown above 20% for 2 decades in a row. So competition from banks is also increasing in pockets like MSME as well as personal loans. Now, home loan growth would be ROA and ROE dilutive given the fact that it is a low net interest margin profile business, and liability scale-up would be a challenge as an NBFC due to various regulatory caps that are in place. So, banking license is a solution. However, this would compress the ROE or return on equity to around 15%. So, they expect slowdown in loan growth and net interest margin compression to result in AUM growth or ROE tapering down to less than 20% from FY25, which would result in derating of the stock. Back to you.
Abhishek, thanks a lot for getting us all of the details. That's on Bajaj Finance. It is down over 2% right now. Some important information that we're picking up as well from our sources that is flashing on the bottom of your screen. We're learning that IndusInd Bank CEO Sumant Katpalia's term will be extended and will be extended by another 3 years. That's what we're picking up. We will get you more details on this as well. But another stock that we're tracking right now is Bajaj Auto. It is actually one of the top gainers on the Nifty. This after two brokerages, that is JP Morgan and Motilal Oswal, have talked about aggressive scale-up of the electric vehicle business. So Sonia is here with all of the details on this one. Sonia?
Well, thanks a lot for that. As you rightly pointed out, brokerages are very bullish on the scale-up of the electric vehicle business for Bajaj Auto, a couple of new launches as well. And they also talk about how the worst of the export weakness may be behind them. So first, let me tell you about JP Morgan. They have an overweight with a target price of 4,400 on the stock. They talk about how the stock could re-rate in 2023 because of the aggression that Bajaj Auto is showing both in two-wheeler and three-wheeler electric vehicles. Now, in the two-wheeler electric vehicle space, they're looking to ramp up the Chetak volumes to 10,000 monthly run rate compared to about 3,000 to 4,000 currently. On the three-wheeler space, there's a launch of an electric vehicle three-wheeler coming up in April. It has been delayed up until now, but now there's more clarity that the launch could come through in April itself. Exports are likely to bottom out and the domestic two-wheeler recovery has also begun. JP Morgan also talks about how the risk-reward is in favor of investors because the valuations look quite attractive at the moment. The stock is trading at 13.4 times FY25 earnings, which is at a discount to its historic multiples. Motilal Oswal also put out a note where they met the management and they talk about the EV scale-up as well. They say that over the next few months, the company is making its entry into the Brazilian market and the upcoming Triumph launch will also be a big growth driver for them. Now, the Brazil motorcycle market is 1/3 of the Indian motorcycle market in terms of revenues, and the upcoming product launch in the cruiser segment from its alliance with Triumph will plug the gap in its product portfolio. Also, they have an aim to reach 17 to 18% market share in the Brazilian market itself. So all of these are triggers, positive triggers for the company, and that's why the stock is the biggest Nifty gainer today.
Thank you very much for that 1.3% gain coming in on Bajaj Auto. Let's talk about IT now. IT is on the back foot today. And one of the reasons is that Nasdaq, of course, slipped about 1.25%. So that has a rub-off impact on Indian IT. But there is also an interesting note coming out of Jefferies on the Indian tech space, which I'd like to highlight. They're basically saying that the top clients of Indian IT companies, their revenue estimates have been coming down. And historically, there is a very high correlation between the revenue growth, the profit growth of the top clients of the IT companies and what the Indian IT companies end up reporting. There is a very high correlation. According to them, it's close to about 84%. So when your client performance, client financials start deteriorating, it's bound to have a rub-off impact on the Indian IT companies' growth financial. And that's why they're saying there is a possibility that consensus estimates of Indian IT companies could face further pressure from current levels. According to their analysis, Coforge, Wipro, LTIMindtree, these are most at risk. So basically, Jefferies has analyzed the top clients of all these companies, and based on their analysis, they're saying Coforge, Wipro, LTIMindtree at most at risk. Infosys and TCS are better placed. So their top clients are not showing a weakness in financials. In fact, their metrics appear to be improving. So they're okay in Infy and TCS. Tech Mahindra's expectations of growth matches what we are expecting from the top clients and the consensus estimates over there. So it's evenly balanced. But on the subject of valuations, they're saying that while Indian IT has corrected from its peak valuation multiple, it's still trading at one standard deviation above its historical averages, which means it's more expensive than what it historically used to trade with. It's now trading at a 26% premium to the Nifty versus an average premium of 11%. But according to them, TCS Infosys valuation premium may sustain because if things go south, Infy and TCS are better placed. There is a flight to safety given a recessionary environment. But amongst these two, their preference is for Infosys. So basically what they're trying to say is the top clients of the IT companies, and these are all global clients, right? They've analyzed the financials and those appear to be deteriorating and consensus expectations of their clients is coming down. So therefore, they fear that IT may also see some downward revision in expectations.
Okay, 0.7% of a lower tick is what we are seeing on the IT index today. We'll do one thing, we'll slip into a short break and we'll get you more on the IndusInd Bank story on the other side with Lata. Stay tuned.
Welcome back. You're still tuned into Trading Hour and take a look at the IndusInd Bank stock. We've seen a sudden spike after we were telling you that we've learned from sources that the RBI is likely to extend IndusInd Bank CEO Sumant Kathpalia's term. So Lata is here with all of the details on this one. Lata?
Oh, well, that's what banking sources tell us, that people in the Reserve Bank appear to be satisfied with Sumant Kathpalia's performance, and therefore the board's recommendation that he be given a 3-year term should be approved. In any case, these sources tell us that Reserve Bank wouldn't want instability in any bank, so giving 1 year and all that would be uncertainty, and therefore chances are that they're going with the full 3-year, which the board had recommended in mid-September. Kathpalia's term the current term ends on March 24th, and therefore an announcement should be expected shortly. The board had extended way back in mid-September itself.
Okay, all right, Lata, important story there. Thank you so much for joining us with those details. The stock is at the day's high right now. So let's talk a lot more about stocks, the market fundamentals as well. Siddharth Khemka, the head of retail research at Motilal Oswal Financial Services, is joining us now. Siddharth, good morning. Thank you so much for joining us. Well, before I speak to you about the markets and what we are seeing today versus the global market action, you just heard Lata talking about this extension that is possible for IndusInd Bank's current CEO. What do you make of this if it actually goes through? And what is your current target and outlook on this stock? I think you're on mute, Siddharth.
Yeah, sorry.
Yes.
So, good morning, Sonal. Yeah, so I was hearing, Lata, I think that would be a positive development. We have been very positive about the way the earning progression is happening on IndusInd. They have been reporting very steady earnings quarter after quarter. And if you look at the credit cost, that has come under control. The market is liking what the current CEO has been able to achieve. So I think overall, if you look at, we believe that the operating performance for IndusInd Bank remains on track. There is a healthy NII growth. The loan book growth has been pretty steady. Last quarter, they reported 19% loan book growth. While the management has guided for a steady loan book growth of 20%. This should help the overall business, and with credit costs under control, we are expecting net profit growth of about 35-36% over the next 2 years, with ROEs reaching about 18%. So a good re-rating should continue. We have a current target price of about 1550 from a 1-year perspective, and obviously we have a buy rating on the stock.
Siddharth, thank you very much for joining in. One of the stocks that Motilal Oswal likes is Varun Beverages. And here you're very bullish about Varun Beverages' growth and penetration in the Tier 2, Tier 3 segment. Can you tell us what is going to be the big driver and how will this change the financials of Varun Beverages from here on to accelerate it?
Yeah, good morning, Rima. So I think Varun has shown pretty steady growth in the past few years in the core business by acquiring the other bottling companies, entering into newer geographies, and also entering into some of the non-beverages like the food segment, which kind of enthusiasms the market. If you look at the current environment, there has been a steady increase in the access to electricity, at least in the rural household. We have seen that there has been almost 13% growth in the rural household electric connections. That has helped the penetration of refrigerators and has also supported the sale of the aerated beverages like cold drinks, which supports the growth for Varun Beverages. Varun by itself gets almost, if you look at 60% of its revenue contribution comes from semi-urban and rural areas. They have been witnessing strong growth in such under-penetrated areas, be it like MP, Odisha, Bihar, Jharkhand, and is looking at even further strong growth in these regions. If you look at, apart from that, this year, the summer has come early. We have seen one of the hottest Feb in last many years, March. Again, very hot. So that is also supporting the consumption growth for Varun Beverages. We believe that the recent correction in the stock price offers a good opportunity for investors to look at a beverage company with strong long-term growth potential.
All right, got that. Siddharth, on this same theme of, the early onset of summer, or hotter than previously seen summer, is there anything else that you would play?
So I think some of the stocks have already started playing out. If you look at some of the consumer durable companies, be it Voltas, Blue Star, they have already seen some run up. I think these companies will do well. Havells is another stock where you have the consumer electric segment, and I think because of both the availability of electricity as well as the hotter summer, some of these companies could also do well.
Okay. There's one segment which is doing really well in trade today. That are these sugar stocks. Balrampur Chini up 5%. The other ones also up anywhere between 6 to 7%. Is there any structurally changing for the sector? We've been talking about this big ethanol push. Sugar prices also went higher last year. Do you think that theme will continue for sugar stocks?
So I think we don't have an active coverage on sugar per se, but if you look at for today, there have been some news flows regarding the global sugar supply, especially if you look at the supply from Brazil that has not yet started and because of the sugarcane season. But if you look at the long-term trend, I think the ethanol story is definitely playing out. Plus, you add to the dynamics of the global supply, which is getting constrained because of issues in Brazil, which is also what we are seeing as an impact to Bajaj Auto, as a note that you referred to some time back. I think that is helping Indian sugar companies to have a firm realization. So that is definitely working. But being a commodity sector, I think the intermittent volatility would be there. Someone needs to play long term. Can definitely have a look at some of these names for, especially to play the ethanol story.
Any thoughts on Bajaj Finance? There is a note which has come from Ambit today, Siddharth. I don't know if you've seen it. Abhishek was just telling us about it. It basically is saying that the company's one-year forward valuation multiple implies that the Bajaj Finance will need to grow at 25% AUM growth. 25% AUM growth over the next 10 years. And their analysis shows that no Indian lender has seen this kind of growth in the last 20 years, and especially with competition rising from banks, and even if they tap other growth avenues like home loans, for instance, it could be dilutive. So in a way, they're a little circumspect on Bajaj Finance, given the high valuations and what that means in terms of what Bajaj Finance has to deliver. Where do you stand on this, on Bajaj Finance, and your thoughts on what Ambit has to say?
So I think, Rima, definitely there is a pressure on growth in Bajaj Finance that we have seen in last couple of quarters. They have been mixed trends because of the slowdown in the consumers' demand that we have seen across the management, across companies, be it your FMCG companies, be it your consumer durables, or be it your the retail businesses. They have all come and said, even the QSRs, that post the festival, the demand had dipped, and that is a